Welcome to Drill On Earnings. We have quarterly results out from Okta. This is the business story behind one stock on a move. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. And Q3 earnings from this company were better than Wall Street expected. Whatever, that means Wall Street got it wrong. They're also better than I expected, so I guess I got it wrong too. $665 million in revenues and 67 cents in adjusted earnings per share. They like these adjustments. It takes out stock compensation and other stuff. But let's look a little bit deeper into these actual numbers and see what we see here. What we found is that this company that sells security, not based on firewalls, not based on passwords, not based on, it's really based on the identity of the user. It's a different approach than is traditionally used in security, and it's working. Again, $665 million in revenues is 14% year-over-year growth. It's not the 20 and 30% growth they were having years ago, but this is now a pretty big business, growing really quickly and keeping a lot of customers. There were a lot of metrics that we saw within this that show us that those products are successful. We saw 108% net revenue retention rate, a dollar-based retention rate. We saw the customer numbers now at 19,450 customers, and a lot of those, let's call it a quarter of them, are really big customers spending over $100,000 each. 4,705 of the customers have an annual customer value over 100 grand. That's good for Okta. And when these numbers came out, the market seemed to like them. The stock was up 15% in after hours trading, and that's after being up 11% for the year. So better results in after hours today than you've seen from an entire year of trading in Okta. But it's similar to what we've seen from these security vendors that we saw it from CrowdStrike, we saw it from Zscaler, now we're seeing it from Okta, that companies are spending on security when they get the product right. And it looks like these guys have the product right. During the conference call, Todd McKinnon, the CEO, I thought he gave one of the most robust defenses of this approach of identity-based management of security, and why companies like Microsoft and others want to grab the customer by giving them one password. He didn't mention Google, but that's certainly implied here as well. But that maybe because those customers are those other companies are trying to do that, that maybe this is actually a reason why their customers really want Okta, so they can be a Switzerland, so they can pick from the vendors that they want to pick from and change when they want to change. That's part of the Okta sales pitch, and it's working. Here's Todd McKinnon.
There's a reason strategically that, and it's Microsoft now, but I think every big technology company that's trying to sell multiple layers in a platform, whether that's collaboration or business applications or infrastructure, is going to be tempted to take, because they all have to build identity. Everything needs a login for itself. They're going to be tempted to take that identity service and use that for general identity and general login, because it has a very powerful lock-in effect. If you can get someone to use your identity, they're going to be more likely to use more things from you. So it's, in that sense, it can be a loss leader. And our argument is, first of all, to tell people that. We say, hey, you don't make the long-term choice that's going to lock you in and remove choice and flexibility. And we all know that when you remove choice and flexibility, it's not just that you pay more in the end, you actually get worse outcomes because you can't pick the right technology. And this is particularly important in the security world, because as we also all know, that security is adversarial and the attackers are coming from many different directions, and 8 out of 10 times these security breaches are caused by compromised identity. So if you are locked into one stack from a security tools perspective and from an identity perspective, you're not going to have as good of security outcomes. So this is the pitch I make to customers, and it's resonating. They understand. I mean, for some customers, it doesn't work. Some prospects, it doesn't work. They don't view technology that strategically, or they don't. It's just cut costs, no matter what, and they go for the bundle. But more and more customers, I mentioned one of the largest tech companies in North America, they realize that identity really matters, and having an independent, neutral identity platform really matters.
So identity matters, this trust-based approach to who the user is and understanding who the user is through their identity, not through the many moats and firewalls you put in front of them, seems to be working for Okta. So your Q3 earnings takeaway, your essential summary of these numbers, good revenue growth of 14% as revenues push up to $665 million in the quarter. But maybe the drill down earnings bite, the one number that tells you a whole lot, that number, $3,659,000,000. What is that? That's their remaining performance obligations. That's the sort of the enhanced number of the bookings in addition to deferred revenues that show that this company is growing that number, that $3,659,000,000 at a 19% year-over-year clip, even faster than the revenue growth, suggesting that zero trust products from Okta are trusted by their customers. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson. Check us out here on YouTube, or follow me on X at Cory TV, or on TikTok, or on Instagram, or even on X at Cory TV. As I mentioned, we want to hear from you.